Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Tuesday, March the 20th, 2018. Happy spring, everybody. Today is the official start of spring in the Northern Hemisphere. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to go through the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We create two main hypotheses for whoever takes control. Nobody's going to tell you what the market is going to do. We can only anticipate and then have a plan ready to execute. And then we have our two alternative hypos that give us our expansion or trend days. And lately we've been seeing a lot of transitioning from one hypo to the expansion hypo, and yesterday was a good example of that. And we'll get into that in just a minute. This is a subscription room if you're interested in checking it out. We do everything live here in the go-to in the pre-market session, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see in Quantum Leap. Are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you're interested in that free trial, send me an email at quantumleapfutures@gmail.com. You're not going to find a website or a blog or anything like that. This is not a commercial venture. We do everything live here in the go-to in the pre-market and then in the RTH session for our members. So let's take a look at the news first. There isn't a lot of news today. Just remember that today is the day before the FOMC. Generally, this is a pause day. We don't get a lot of range, although with the 20-period daily ATR running right now at 43.11, our ranges have been quite big. Yesterday's full session range was 59.25 points, and our RTH session was 48. So this may be the exception to the rule, but generally the Tuesday before FOMC will make a move early in the morning and then basically go sideways with a tight range going into the Fed announcement tomorrow. Generally, we find a position of balance, which is going to be, my anticipation is that we're going to balance around that 18, that longer time frame microcomposite VPOC. But we'll get into that in just a minute. 6 minutes, we've got Red Book, not a big move, market mover. Some European news, 11:30, we got the 4-week bill auction. Later in the afternoon, 4:30, we've got API weekly crude. So there's really not a lot of scheduled news. Of course, we have to worry about headline news. So let's review yesterday. I'm going to do something a little bit different today. I'm going to basically play our hypos. And this is a good example of how we transitioned from hypo 1 into hypo 2. So here's what our main hypotheses were for yesterday. So my main hypothesis is a open auction out of range. I'm looking for a move up into the 48 to 49 area. Then I'm looking for responsive sellers to step in, rotate us down through the overnight VPOC, chop in here, come down. Remember that our NFP, non-farm payroll, scene of the crime, has not been visited in the RTH session. That's 38.75. That is my primary target for hypo 1. I'm looking for balance here, a push down lower into the overnight low, and then basing and coming up and chopping in around the 36 to 41 into the close. So open auction, move up, failure to get above the 48 or a quick pop up, and then rotation down into the main target, get a probe lower down into the 33, maybe even the 30, and then base and start working our way back and chopping in this area between 36 and 41. So that is hypo 1. Hypo 2 is going to be a gap and go day because of the fact that gap rules are in effect, and I'm looking for an open test drive, a push up into the 45, or 48, similar to hypo 1, but then I'm looking for sellers to take control and rotate us down through to this 33 overnight low and then fail from here and push down. The month open on the M contract is 27.2375. That's in the Globex, and a push down into the microcomposite VPOC, which is down here in the 17 and 18 area, and basically find a base there and start working our way up and closing somewhere in around the 27 to 25 area. So that's hypo 2. Hypo 3 is an open auction, out of range, a push down into the 39 base there, find buyers, come up, fight the 48, chop between the 48 and the 45, and then break higher and come up into the prior balance and the 6-day microcomposite and close the gap and chop around in here in the balance that we've had for the 6 days up there. And then hypo 4 is a open drive back up to close the gap, come up into the 48, chop here, push up, close the gap, and then get continuation and move all the way back up into testing the 65 to 67 area with possibly a late day probe up into the 69.75 close. Okay, so that was our 4 main hypotheses. Now let's take a look at what actually happened. We opened auction. Now we didn't get the move up that hypo 1 and hypo 2 were expecting. We made the move up prior to the RTH open, but we didn't get the continuation up into the 48 to 49 area. We basically failed at last week's low at the 45, and basically instead of an open test drive, we had an open drive down. And basically, so right now we're in hypo 1 with the main target being that 39 that gets taken out, and then we're targeting for this 33 area with the possible probe down to the 27 and then basing and working our way up. We got down to that 33 level and we bounced the first time off of it, but then we blew right through it. So now we're thinking, okay, we're coming down to the month open at the 27.2375, the M contract month open. We paused there, and then I'm going into hypo 2 and thinking that we're going to get a trend day. Look at the size of the profile. It's very thin, multiple distributions. This is the clues, and we're talking about staying, don't get long. You're looking for shorts, and we're looking for that big move down to the 27.1875. That's the longer time frame microcomposite. We get down there, we chop in that area, and then we fail. We did go lower than I anticipated. I thought that we would base down here and then close around the 25 to 27, and we actually went down, and we put in a week low yesterday, with this 99 and this 97 and a quarter, put in a B-shaped profile, and then we rotated, and we didn't quite get up to the 25 area, but because we went lower, the rotation and the short covering into the close on a B-shaped profile wasn't going to get as high as I thought. We only got up into the 23, and we closed in the 23 area. So that's what yesterday gave us, a B-shaped profile, long liquidation. We've had 4 days in a row where we've had lower highs. If we take a look at the overnight session is, got a pretty decent Gaussian distribution. We don't have a lot of kurtosis around the VPOC, but we basically have chopped above and below the open. So inventory is more neutral, and we're basically filling in the thin part of the profile. Our overnight low was a move down to the VPOC from yesterday, and we bounced off of that VPOC, creating a weak low in the Globex with a double bottom here. So I am expecting, my main hypothesis today is a rotational day. I just don't know if it'll be an upside or downside bias. So let's take a look at the macro. I always like to start my day with the same routine. I use a simple candlestick chart with a 9 EMA and a 20 SMA. I do this because I want to just remind myself each morning, okay, that where we are in terms of the trend in the longer time frame down to the smaller time frame, and look for clues that give us the possibility of a change in trend. So on the monthly, I'm looking for slope and separation of the 9 and the 20. Is price paralleling the 9? It is. We are inside month right now. We did have a negative month that violated the one-time framing up. We had 14 months of one-time framing up. February did break that one-time framing, challenged the trend, but we bounced up. Now we've got an inside bar, and the trend is still intact until we get back into the lower 2600 on the monthly. On the daily, on the weekly, okay, we did look like we were going to violate the trend. Then we bounced up. We had a bunch of inside weeks, and now we're coming down. We're below the 9, and we're challenging the 20. And I've got my key line in the sand at 27.05 and a quarter. That's where I really start to think that we could see a break below that week low that we put in yesterday. Going to the daily, you can see we are in this consolidation. We're in a symmetrical triangle. I'm waiting for a breakout. I do anticipate the breakout is going to be a strong breakout. I think the catalyst will be tomorrow, whether or not they raise rates or don't raise rates. But for the most part, we have lost slope and separation. We are below the 9 and the 20, and we are seeing some weakness coming in on the daily. Going to the intraday, the 4-hour, you can see that we have been trending down, and we're failing to get back above the 9 and the 20, and we're coming up to test the 9 from below again. But for the most part, the trend has changed to the downside, but it's still not really strong. And going to the 30-minute, we were starting to get strength of trend down during that down move yesterday, but they've taken it back, and basically we're in this consolidation again and waiting inside of this balance. If we take a look at the bigger picture, we had this big move up out of the break of the balance that we were in down here, go in, put a new all-time high in. Then we failed to hold value up here in the 2831 area, and we rotate all the way down into the 2500s. We come down to this prior microcomposite VPOC in the 2539.75. We're actually, the low was 25.29 in the Globex. Then we rotate back up, and we've been chopping inside of this wide value area. This value area is actually expanded with this distribution zone. We did have a value area high at 2754 area, and with the volume that we put off here, it expanded the value area. But we are unable to hold this distribution. The 2754, the prior microcomposite value area high, became our VPOC, and where we tried to hold value last. And what do? We gapped down yesterday. We come down, and what are we doing? We're chopping now in between the longer time frame microcomposite, which is the 1875, and this 3-day distribution zone before we gapped up and broke out of what was the value area high at 54. And now we're chopping between the 30 and the 1875 area, the 19 area, and back inside of balance. I'm anticipating that we're likely, if we do not get above the 33 area, you see these two VPOCs, 3175 and 3350, I believe it is. If we don't get above there, accept that price, I'm expecting to chop and come down and get stuck inside of this lower wick here. We didn't really auction that very well yesterday. So expecting just a rotational day. And key level to watch is the 2705 and a quarter. Below that, I think we come down and we break the low and push down towards this lower distribution area down in the 2682 area, possibly even coming down to the 72 area, which is the value area low. So if we take a look at our levels, I've already got the levels put in for the day. I didn't put in the high because I was waiting to see if we broke this double top. So let me put the overnight high in at the 29. So we're currently right now trading right near the close, so we're not really going to have any gap. There's no real value yesterday. It wasn't really a trend day. It turned out to be a normal variation because we closed back inside, but we had a big rotation up. So the value area is skeptical, but I'm going to be watching the value area high, not because of the value area high, but because it defines whether or not we have a positive or negative month going on. It's the 20th today, and we're fighting the month open. So we have basically a doji month going on right now. So what is my main hypothesis? I'm looking for a wide opening swing. I think there's going to be two-sided trading on the open, so be careful because of the fact that we're going to be opening right around the month open. So I'm looking for an open auction in range, just outside of value. I'm looking for them to come up and test the 30 area and this former 32, 33 area with the two microcomposite VPOCs. I'm looking for responsive sellers to step in, rotate us down, and basically I'm looking for us to chop inside of the lower distribution. Look how flat this, in fact, I should expand this out so you can see it better. Oops, didn't want to do that. Look how blunt and toothy this lower distribution is. And that's what created our tail on the profile. And I'm expecting us to get stuck down here and basically chop between the 2705 and the 2720 area and just find balance around that former microcomposite VPOC at the 1875 level. So that is Hypo 1. Hypo 2, going to be the same thing, really. Only the difference will be is a wide opening swing and they move down to the 2705 area, okay, and then find balance and rotate and get stuck in here and chop between 16 and between 13 and 25 area and chop in here. Again, expecting, I put 50% weight on both Hypo 1 and Hypo 2 because I just don't know who's going to take control first, but I expect it to be two-sided trading. Hypo 3 has got to be a take-back day. Reason being is the strong buy-in that has come in, and I'm looking for an open auction. I'm looking for a move down into the 16 level, take out the overnight low, but then find responsive buyers and rotate us up and come up into this 32, 33 area, chop here, and then push up and come up and get into above last week's low and come up into this 6-day microcomposite epoch and go sideways into the Fed day there. That is Hypo 3. Hypo 4 is a breakdown day, open auction, failure to take out the overnight high or take it out but fail to hold above the over-under line, come down into the lower distribution, chop between the key line in the sand, 2705, and the centennial number, and then break below the low from yesterday at 97 and a quarter, come down, hit this 91.75 target, and then get a late day probe down into the 85, maybe the 78 area, and then find balance and rotate and close somewhere just below the 2700 going into the Fed day tomorrow. So those are my 4 main hypotheses. Take a quick look at gold. Gold has broken that 14 level again. Whoops, that's the RTY. I want my gold. Where's my gold? We continue to still find some balance, but we're fighting this this 14 level. We've broken below it, and I'm looking, if we hold below this 14 level, I'm looking for a test of the 13.036 today, possibly 13. We haven't been doing much. The 3-day balance down here is at the 1170. So, likely to chop around there if we can't stay below it. But basically, I'm looking for a test down to the 13.036, maybe 1300 today. Anything below the 1298, again, looking for the bigger move down here. If we get above the 14, look for them to rotate up into the 18 to 22 level again and chop some more here. Anything above the 29 gives us a breakout again. But gold is holding and balancing coming into the FOMC tomorrow, and I expect it to have a breakout as well on the FOMC news. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.